Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at the Exchange ETF conference, and joining us for this segment, we have Emily LeStrange. She's the head of Vanguard Personalized Indexing to discuss when advisors should use personalized indexing. Emily, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. It's great to be here.
Thank you. And what does personalized or direct indexing allow investors to do?
There's primarily two use cases when it comes to the benefits of personalized indexing, or sometimes direct indexing, people will call it. The first has to do with the fact that it's an incredibly tax-efficient solution, particularly for those high net worth investors that have a lot of capital gains. So think of it as a solution great for tax-smart transitions, or even tax loss harvesting that allows you, regardless of what the index is doing, to harvest securities that are at a loss, use those losses to offset gains that might be elsewhere in your portfolio. The second big use case would be around personalization. So you can think about this from a values perspective. ESG is certainly top of mind for a lot of advisors, but also from a concentrated position perspective. So you might have a highly appreciated big block of single stock in your client's portfolio. To tax transition, to build around that exposure, another great benefit of personalized indexing.
Is it a fit for all investors or only high net worth?
You know, I would say that investors that have a lot of capital gains that desire a degree of personalization that they perhaps couldn't find in a mutual fund or in an ETF, they might find some merit in the direct indexing space, but broadly speaking, I think about the value of ETFs, highly tax efficient, great for a lot of investors, lower starting minimums. For many folks, that's going to be a good answer.
What are the four benefits of personalized indexing?
The four benefits?
Yes.
You know, when I think about it, it's certainly tax efficiency, it's certainly ESG, that values customization, tax transitions like I mentioned. The one I didn't talk about though would be factor investing. So you might have a certain view of the world, you might want to go a little bit more value, a little bit more momentum based on your perspective of what factors might outperform in a given cycle. We have the opportunity here with direct indexing to tilt your portfolio either towards or away those exposures in a way that could be really advantageous.
So investors can work with the index and basically build their own fund is what this sounds like.
That's right, yeah. So from a lot of these macro trends in the industry, be it unbundling, more personalization, the pooled product space can be really great for all the reasons I talked about, but it can also be limiting. And if you're looking for something truly bespoke to you, being able to do that in an SMA, now more than ever before, is really accessible.
Sounds like a lot of fun, actually. All right, Emily, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.